Jay, what's your market outlook for 2026? Can the equity markets keep it up for a fourth straight year?
Thanks, Greg. Yes, we're extremely bullish about this year. We have an 8,000 target on the S&P. And we actually also think that the NASDAQ and S&P will underperform the Russell and the equal weighted S&P and the Dow. So we think investors should broaden out their horizons, look for value income stocks, and not just be focused on the NASDAQ.
Can you expand a little bit more on the sectors that you see as undervalued?
We like financials again this year, but last year we were long investment banks. This year we're more focused on regional banks. They're actually reporting good earnings recently. And we also like private equity firms. They're higher risk, but we think they've been unfairly punished because of fears about problems with private credit.
Are there any specific companies that you're bullish on? I know lots of people, they get into ETFs because they want that diversification. But last year, everyone was watching those Magnificent Seven. Maybe it's the Magnificent Two or Three now. I don't know. Which specific companies do you like?
So we do expect our large cap dividend fund, ICAP, to do well this year. It did pretty well last year, but did not beat the S&P 500. And so a couple companies that are larger holdings there, KKR, we love. Everybody knows that company, great brand, private equity firm, trading very cheap, growing AUM about 20% a year. And we like regional banks like CFG, Citizens Financial Group, trading at reasonable multiples, growing NIM, and we think the Fed will cut 3 times, so that's going to be beneficial to regional banks.
Well, they cut back in 2025 a few times, still didn't move down the 10-year too much. Why is that? What's your expectation for Treasuries in 2026?
Well, we think that's a little bit of a misunderstanding about what's going on with the 10-year Treasury. It trades almost exactly 100 over the expected terminal rate of Fed funds. So what happened last year, the Fed cut, but then the moment after, they started being really bearish about future cuts. So as long as we get the 3 cuts, we'll think the 10-year will go to 375. And the reason we think we'll get 3 cuts is not for political reasons, but because we believe inflation is going to hit the 2% target this year.
And what are your thoughts on tariffs? We're waiting for a Supreme Court decision. If it comes either way, how will that affect your predictions?
Well, we think normal tariffs, so sales tax like tariffs, is very beneficial for the economy, not trade wars like we might get with Europe. So to just distinguish between the two. And we are projecting only a 4.5% deficit this year because of $400 billion of tariffs. And that would make the federal budget deficit manageable, because usually the economy grows at 5%, so you'd have a slow decline in the total debt to GDP. So we're bullish about normal tariffs and the budget deficit and rates.
And then finally, are you bullish on the consumer? Because for a long time, everyone would say, well, America is a consuming society. As long as they're buying, everything's going to be okay. As we head into tax season, they may have to save up to pay some taxes, of course. What's the status of the consumer?
We're actually bullish on the economy. We're forecasting 3.2% increase in GDP next year. And part of the reason is that the tax cuts from the OBBA were not recognized, so they weren't rebated to consumers. So they're going to get big tax refunds on average, at least lower income. So we think that'll be a tailwind. And the other thing to keep in mind is that consumers are like woodchucks who chuck wood. That consumers consume. Low-income consumers have to consume. High-end consumers want to consume. So it's extremely stable. What creates recessions is declines in investment.
All right. Well, thanks for coming on and talking about it.
Thanks, Greg. Appreciate it.